All right, so you're here because you really want to get a grip on what's moving and shaking the world economy.
That's exactly it. You want to go deeper than the headlines and those talking heads. See what's really going on beneath the surface.
That's what this deep dive is all about. We're going to be looking closely at what was happening in March 2025.
We've got this fascinating analysis, blending some hard market data with some pretty thought-provoking ancient wisdom, too.
And the real goal here is to see if those global trends, at that macro level, can teach us something about how organizations work or don't work, as the case may be.
And especially those kind of hidden problems, the stuff that comes from inside the organization, not just the external shocks everyone's always worried about.
As someone who spent their career deep in finance, Yan-Hui, I know you've seen how those endogenous problems, inefficiencies, departments not talking to each other, strategies that are stuck in the past, they can be just as damaging as any external threat.
Absolutely. And that's the intersection we're exploring. We have this analysis of the global economy in March 2025 using the wisdom of Professor Yi Jing, looking beyond just the obvious market movements.
So our mission here is to pull out those key insights from this picture of, let's be honest, a pretty turbulent time in the global economy. Insights that could give us a whole new perspective on how organizations need to adapt, how they need to deal with their own internal weaknesses.
Exactly. And for you, Yan-Hui, with your background, PhD in finance, all the work you've done consulting with organizations, this should be especially relevant. It's like holding up a mirror to those internal dynamics that can make or break a company.
We're not just talking textbook theory here. We're looking for those surprising facts, those connections that make you think, hold on, I never saw it that way before.
Right, the stuff that really makes a difference. So to kick things off, one of the first things that jumped out at us from March 2025 was this kind of contradiction in the European markets.
Contradiction? How so?
Well, on the one hand, you had some pretty significant gains. Greece was up over 6%.
Wow, that's a big jump.
It was. Hungary, too, over 4%. And there were several others showing solid positive movement. So on the surface, at least in some parts of Europe, things look pretty good.
Yeah, I'm seeing that in the data too. But I'm guessing this is where things get interesting, right? Where we start to see those parallels with what can be happening inside organizations.
Exactly, because alongside that growth, there was this noticeable increase in market volatility. The VIX, which people often call the fear index, jumped over 11%.
And just a reminder for our listeners, the VIX basically tracks how much the market expects prices to swing around. So a higher VIX usually means more uncertainty, more nervousness.
Exactly. And it wasn't just the VIX. Similar volatility indices for the Dow and the NASDAQ were also climbing. It's like the analysis uses this really evocative phrase. It says it was like celestial winds clashing with earthly currents.
Oh, I like that. Very poetic.
It is, isn't it? But it also gets at this underlying tension. You have these pockets of positive performance, but this rising volatility is like a warning sign. Like the markets are saying, hey, things might look okay right now, but be ready for some rough weather ahead.
It's almost like a company posting record profits, but having all sorts of internal drama going on behind the scenes that nobody on the outside sees.
Yeah, that's a great analogy. And the analysis even pulls in this ancient wisdom reminding us, it says, which basically means deal with problems before they blow up. Find peace before danger hits.
I like that. It's like preventative maintenance for your organization.
It is. And thinking about your work, Yan-Hui, haven't you seen this play out in organizations, companies celebrating short-term wins while ignoring those internal warning signs that could really derail them later on?
Absolutely. I've seen it so many times. Organizations hitting their targets, looking good on paper, but underneath. There are these huge inefficiencies, different departments working against each other.
Exactly. That tension between what appears stable and what's actually bubbling beneath the surface. Just like those market indicators we were talking about. Flashing yellow even though there are some green lights.
So it's a reminder that success can be deceptive, that you really have to dig deeper to understand what's truly going on. And speaking of digging deeper, the analysis also points to some pretty concerning stuff happening in the bond market. Yields on high-yield bonds, what some people call junk bonds, were way up, creating a large spread compared to the safer government bonds.
Right. And that spread, the difference in yield between those riskier corporate bonds and those safer government bonds was huge, over 1,000 basis points. That tells us investors were seriously worried about the financial health of some companies, their ability to repay their debts.
It's like if you were lending money to a friend and suddenly they started offering to pay you back with a way higher interest rate. You'd probably start wondering if they were in trouble.
Right.
Exactly. And the analysis actually uses this Chinese phrase, 习了, which means a solid financial foundation and a good plan for moving money around.
So basically making sure you've got a strong financial safety net in case things get bumpy.
Right. It's like having enough cash flow and a healthy balance sheet to weather those internal storms or those unexpected market shifts. So even though there were some bright spots in Europe, the big message here was be careful.
Don't get complacent.
Right.
Build that strong financial foundation. Because what looks good on the surface...
Might not be the whole story.
Okay, so we've talked about that initial market unease. But the analysis also points to some potential opportunities, right? And a real need for strategic adaptation. There's this idea of threading the needle of celestial mechanics.
Right. That's where the analysis gets really interesting. It draws on Sun Tzu, the Yi Jing, this ancient wisdom, reminding us that in the midst of chaos, there's also opportunity.
I love that quote. It's so true. So what were they seeing as opportunities back then?
Well, they were suggesting this strategic shift towards emerging markets that had what they called real productivity and domestic demand. Places like the ASEAN countries, India, Latin America.
Okay, so moving away from those maybe more traditional markets and looking to where the real growth is happening.
Exactly, and it's all about being proactive, recognizing that the global landscape is shifting, and then reallocating your focus and resources to where the promise is.
Makes sense. And this is where it gets really relevant for organizations, right? It's like if a company is facing challenges, maybe a department is underperforming, maybe a product isn't selling anymore, they need to think about how they can reallocate those resources, invest in the areas that are actually working.
Right. It's about identifying those parts of the organization that are genuinely productive, that are adding value, and then making sure they're getting the support they need to thrive.
So it's not just about cutting costs or downsizing. It's about making strategic investments in the areas with the most potential.
Exactly. It's about being smart about where you put your resources.
And the analysis actually gets really specific about this, right? They talk about using D&B corporate repayment reports to identify companies that are financially healthy.
Right. They even use this Chinese phrase, peidex guoyouqian, which basically means avoid overexposure to areas with weak peidex scores.
So paydex is basically a measure of how reliably a company pays its bills.
Exactly. And a low score can be a red flag. Like, if you're thinking about lending to a company or partnering with them, you want to make sure they're good for it.
That's a good point. And this ties in directly with what we were talking about earlier, about building a strong financial foundation. Whether you're an individual company or a whole region, financial health matters.
It does. And if we think about this from an organizational perspective, it's like saying, hey, we need to assess the health of our different departments or processes.
Right. Are they consistently delivering? Are they efficient? Are they contributing to the overall success of the organization?
Exactly. It's all about understanding where your strengths and weaknesses are, and then making strategic decisions based on that information.
Okay, so we've talked about the need for caution, the potential opportunities in emerging markets, and the importance of financial health. What else did the analysis highlight?
Well, it also touched on some specific investment strategies, things like risk-controlled ETFs and diversified regional bond allocations, especially in the context of the recovering China A50 and Hang Seng indices.
So even in markets that were showing signs of recovery, they were still advising caution. Don't put all your eggs in one basket. Diversify, manage your risk.
Exactly. It's not about chasing those big, flashy gains. It's about being smart and calculated. And then there was this really interesting signal coming from the commodity markets.
Commodities, what's that all about?
Well, copper and nickel prices were way up, and they were seeing those as leading indicators, signs of growth in the new energy sector and infrastructure. And this was in contrast to, precious metals like gold and platinum, which were only seeing modest gains.
So basically, the market was saying, hey, these are the sectors to watch. This is where the real action is going to be.
Right. And for organizations, this is super valuable information because it's like getting a sneak peek into the future. What are those key growth areas? Where should we be investing our resources?
So instead of just reacting to what's happening right now, you're using those market signals to anticipate future trends.
Exactly. And then there's this interesting principle the analysis introduces. It's this Chinese saying, 不设限, which means using conventional methods for the main effort and unconventional methods for surprise wins.
So be prepared to think outside the box.
Right. It's about looking beyond the obvious, maybe exploring those partnerships or technologies that nobody else is thinking about.
Okay, so we've got this sense of unease, some opportunities, the need to be strategic and adaptable, but the analysis doesn't stop there, does it? It also points to some emerging challenges, and it really emphasizes the importance of foresight.
Right. It quotes this saying, in Chodre, which means even after finding balance, you need to be ready for new challenges. So even when things seem good, don't get complacent.
It's like that idea of the only constant is change.
Exactly. And then they get into some specific forecasts based on these, well, they call them celestial indicators.
Celestial indicators, that sounds intriguing. What are those?
They're basically using this ancient wisdom, this kind of astrological framework, to predict future trends. So, for example, they talk about Tario, which suggests prosperity for things like wisdom, creativity, marketing.
Okay, so a good outlook for sectors like tech, innovation, anything that involves creativity and smarts.
Right. But then there's a contrasting forecast, Ter, which suggests a weakening of real estate and finance, especially with interest rates going up.
So a bit of a mixed bag. Some sectors looking strong, others facing headwinds.
Exactly, and this is where that foresight comes in. Being able to anticipate those shifts and adapt accordingly. And again, we see that principle of two-to play, using those conventional methods, but also being ready to pivot and try something new.
So maybe if a company is heavily invested in real estate, they need to start thinking about diversifying into other areas.
Right, maybe medical, biotech, those sectors that are expected to have more long-term stability.
So it's not just about riding the current wave, it's about looking ahead and seeing where the next wave is coming from.
Exactly. And the analysis also highlights these emerging areas of conflict. Things like competition for capital and talent, the blurring of lines between the digital and the real world, and the increasing complexity of government policies.
It's like the world is getting more and more complex. And those complexities are creating all sorts of new challenges.
They are. And one of the key pieces of advice the analysis gives is for companies to proactively establish regional bases, driven by the trends of Woyono global trade restructuring.
So basically, don't put all your eggs in one basket geographically.
Right. Diversify your operations. Reduce your dependence on any single market. The analysis even quotes this saying, Puro, Iugrilla, which means secure an invincible position before seeking victory.
I love that. It's like building a fortress that can withstand any storm.
Exactly. And it ties in directly with what we've been talking about. Building a strong financial foundation, diversifying your investments, anticipating those future challenges.
It's about being proactive, not just reacting to what's happening, but actively shaping your own destiny.
Right. And then there's this fascinating section on what the analysis calls Iluko, tariff-immune assets.
Tariff-immune assets, what are those?
Well, they're basically assets that are less affected by trade wars and tariffs. Things like Bitcoin, quantum encryption funds, even space mining stocks.
Wow, space mining stocks, that's pretty futuristic.
It is, but it shows how people are looking for ways to navigate these increasingly complex global trade dynamics. And one example they highlight is Rocket Lab. Their stock went up like crazy, over 300%.
So it's like people are looking for those alternative investments, those safe havens that are less exposed to traditional market volatility.
Exactly. And then the analysis delves into some really specific examples of how the global landscape was shifting. Things like the carbon tariff agreement between the EU and Mercosur.
That was a big deal at the time, basically putting a price on carbon emissions from imported goods.
Right. And then there was the EU's development of a digital euro with embedded smart contracts, potentially as a way to bypass US tariffs. And then, of course, there was China's gold-backed digital RMB.
Which some people saw as a move towards de-dollarization, a challenge to the dominance of the US dollar in global trade.
Exactly. So these are all examples of how external pressures are forcing countries and companies to adapt, to find new ways to operate in a changing world.
It's like a global game of chess. Everyone is trying to anticipate their opponent's next move and make the best strategic decisions.
And the analysis wraps up with this really striking example, the ASEAN Digital Tariff Alliance. Basically, a group of countries in Southeast Asia trying to remove barriers to digital trade.
They were talking about things like removing cross-border data taxes and using 3D printing to produce goods locally.
Right, so it's like a surgical strike on traditional supply chains, a way to circumvent those tariffs and trade barriers.
It's amazing how quickly things can change and how important it is to be able to adapt and innovate.
Absolutely. And this brings us to the final takeaway from the analysis, the part that really connects to your area of expertise, Yanhui, the management implications, the lessons for organizations.
Right, because ultimately all this stuff about the global economy, the market trends, the political shifts, it all impacts how businesses operate.
It does. And the analysis reiterates the importance of adaptability and strategic thinking. It reminds us of the Yi Jing's emphasis on balance, Sun Tzu's advice to anticipate those unseen blows.
So be prepared, be flexible. Don't be afraid to change course when necessary.
Exactly. And it also emphasizes the importance of paying attention to those key economic indicators. Things like exchange rates, commodity prices, bond yields.
And it goes even deeper than that.
Yeah.
It talks about the importance of looking beyond just the profit margins when assessing the health of an organization.
Right. It's about evaluating that agility, that capacity to pivot when things change. And they actually highlight a D&B white paper that distinguishes between companies with strong and weak repayment records.
So it's like saying, look, it's not just about making money. It's about being financially responsible. It's about being able to meet your obligations.
Exactly. And that's a key indicator of overall health, because if you can't manage your finances, if you can't pay your bills, you're not going to be around for very long.
No matter how good your products are, no matter how talented your people are.
Right. And the analysis even suggests considering some non-traditional opportunities, things like investing in the rebuilding efforts in regions like ASEAN or Ukraine.
So seeing those periods of upheaval, those disruptions, as potential opportunities for growth.
Exactly. And this ties in with everything we've been talking about. It's about being adaptable, being creative, being willing to think outside the box. And ultimately, it's about recognizing that the world is complex, that things are constantly changing.
And that the only way to succeed is to be able to navigate that complexity, to be able to anticipate those changes and adapt accordingly.
Exactly. So as we wrap up this deep dive, Yanhui, I think the key takeaway is this. The global economic landscape of March 2025, with all its contradictions and complexities, offers a really powerful lens for understanding how organizations need to operate.
It's a reminder that those surface-level indicators, whether it's market performance or a company's profits, don't always tell the whole story.
Right. You have to dig deeper. Look for those underlying currents. Anticipate those potential risks.
And be prepared to adapt, to change course when necessary, to seize those opportunities that emerge from chaos.
Because in a world that's constantly evolving, the only way to survive, let alone thrive, is to embrace that change.
So as we leave you with that thought, Yanhui, I'm curious. In a world where things like tariffs, digital currencies, localized production are constantly reshaping the landscape, how can organizations best identify and address those vulnerabilities? Those internal weaknesses that can make them susceptible to those external shocks?
That's the big question, isn't it? How can they apply those principles of foresight and adaptability that we've been talking about to build more resilient, more successful organizations? Organizations that can not only weather the storm, but actually come out stronger on the other side.
It's something for all of us to think about. And maybe, just maybe, it's a topic for a future deep dive.
It definitely is. Thanks for joining us.
Thanks for listening.